Your number of qualifying children is a major factor in determining the amount of your credit. And the more qualifying children you have, the higher your credit. So this concept of how many qualifying children you have is really important. So let's talk about that. Who are your qualifying children? So this shows the requirements to have a qualifying child. First of all, the person has to be related to you in a certain way. Next, they must be under a certain age and younger than you. Next, they must live with you for more than half the year. And finally, they must have a Social Security number. What we're going to do now is go through each of those requirements, and I'm going to explain them to you. As I do that, please think about whether the requirements are being met and whether you have any qualifying children. This is not a requirement to claim the Earned Income Credit, but you have to know how many qualifying children you have to determine the amount of your credit. So it's a very important part of the Earned Income Credit. The first requirement is they have to be related to you. And they have to be related to you in one of really two categories that you see here at the top of this slide. The first one is your child, stepchild, adopted child, or foster child, or any of their descendants. So could be your grandchild or your great-grandchild. Or they can be your sister, brother, half-sister, half-brother, stepsister, or stepbrother, or any of their descendants, such as your niece, your nephew, your grandniece, your grandnephew. So those are the relationships that make for a qualifying child. Any other types of relatives cannot be your qualifying child for the Earned Income Credit. So think about how many people you have in your life that would meet these particular relationship requirements. I do want to note, because it can be important to some people, that stepchild, stepsister, and stepbrother relationships do continue even if the marriage that created them has ended. Those do go on for a long time, really forever. That's the relationship requirement. Next, they have to be under a certain age and also younger than you. Let's jump into what it means that they have to be under a certain age. There's a general rule that says they have to be under the age of 19. And more specifically, they have to be under the age of 19 as of December 31. So for example, for the 2020 Earned Income Credit, they have to be under the age of 19 as of December 31, 2020. There is an exception that says if they're a full-time student, they just have to be under the age of 24. So in other words, if they're a full-time student, they can be a little older and still be your qualifying child. They can still meet the age requirement. So the obvious question is, what's a full-time student? Let's answer that question. A full-time student is an individual who goes to school on a full-time basis for some part of 5 or more calendar months during the year. And those 5 months do not have to be consecutive months. Next, if they're a student, they need to be going to a school. And a school is defined as elementary school, middle, junior high school, college, university, technical school, trade school, mechanical school. And then finally, whether they are full-time is based on how their school defines full-time. So the IRS doesn't have some definition of a full-time student for this purpose. They just say you have to look at how their school defines full-time. So let's do an example to show you how this works. Let's say that Sam becomes a full-time student at a college on January 15th, but he drops out on March 5th. He later in the year enrolls at another college on a full-time basis and takes courses during June and July. He's not a student at any other time during the year. Well, obviously Sam is having some trouble deciding whether he wants to go to school or not, so we have a sort of difficult situation here in terms of figuring out whether he's a full-time student. So here's the way we do it. Turns out he actually does meet the requirements to be a full-time student because he was a full-time student for some part of 5 calendar months. And remember, the rule is you have to be a full-time student for 5 or more months. How do we get to that conclusion? Well, he was a full-time student during some part of January, February, and March. You do not have to go to school the entire month, just some part of the month. So we get to count January as a month, even though he didn't start until January 15th. We get to count February, and we get to count March, even though he dropped out on March 5th. He was a student during some part of March. So that's 3 months. And then again in June and July, he was a full-time student. That's 2 months. So that gets us up to 5 months, and 5 months is all we need for Sam to be a full-time student. So Sam doesn't need to be under 19. He can be under 24, and he will meet the age requirement. The next age requirement, in addition to the being under 19 or 24, is that the relative has to be younger than you. And you may react to that and say, that's really silly, because how can I have a child who isn't younger than I am? Very good point, very true. So it's usually a very easy requirement to satisfy, but not in all situations. So take a brother or sister. Well, you can have an older brother or sister, in which case they're not going to meet the requirement to be your qualifying child, because yes, they're related to you in the right way, but they're not younger than you. If it's a younger brother or sister, then you're fine as long as they meet the age 19 or under 19 or under 24 requirement. There is a special rule that may help you. If you are married filing a joint return, the relative just has to be younger than you or your spouse. They do not have to be younger than both of you. And to sort of bring that rule to life, let's look at an example. Let's say the facts are that you're 21 years old and your sister's a full-time student and is 23 years old. Well, your sister meets the requirement that she's under 24 as a full-time student, so far so good. But let's take situation one. Let's say you're not married and your sister's not younger than you, she's older than you. So she doesn't meet the age requirement and she cannot be your qualifying child. Now let's move to situation two, and let's say that now you're married and you're filing a joint return and your spouse is 25 years old. Remember, you're 21, your spouse is 25. Well, your sister is younger than your spouse. So therefore, your sister does meet the age requirement because she's younger than your spouse. So that's how that rule works. One more point on the age requirement. I do want to point out a circumstance where that age requirement does not apply at all. That's why I put an X through it. And that situation is if the relative was permanently and totally disabled at any time during the year, then the age requirements don't apply. I'm not going to go through the definition of what it is to be permanently and totally disabled, but you will find the definition in Publication 596, which is the IRS publication on the Earned Income Credit. And in Publication 524, the IRS actually gives you examples of what it means to be permanently and totally disabled. But again, no age requirements at all. They could be 80 years old if they're permanently and totally disabled. And also they don't have to be younger than you if they're permanently and totally disabled. So that's an important rule that can be very helpful in some situations. We're now ready to talk about the requirement that they must live with you for more than half the year. The relative must live with you for more than half the year in the United States. So it must be in the United States, and that means the 50 states and the District of Columbia. Puerto Rico and U.S. possessions don't count as being in the United States. So if you live there, you don't meet the requirement. There is a special exception to the rule for military personnel who are stationed outside the U.S. on extended active duty. They're living in another country, in that case, counts as living in the United States. I want to make now a really, really important point, and that is it doesn't matter who paid for the living expenses. This rule is not about who provides the support. It's purely about where the individual lives. Let's do an example of that to kind of bring that to life. I think this is a really important point to make. Let's say that your daughter lives with you more than half the year in an apartment that you rent, but your ex-spouse actually is paying the rent and is also paying most of your daughter's living expenses. You are the one who gets to count your daughter as a qualifying child for the Earned Income Credit. It doesn't matter that your ex-spouse is paying the expenses. The only thing that matters is where your daughter is living, and she's living with you. So you get to count your daughter as a qualifying child for the earned income credit. Your ex-spouse does not get to count your daughter as a qualifying child. A very, very important rule. There are some special rules for the more than half the year requirement. So this is where we start to get into some more details, but they can be very important details for certain people. So we certainly cannot skip over these. And this is sort of one of the reasons why this video is a lengthy video, but you know, when it comes to tax rules, you really have to know the rules in order to apply them correctly to you, and you have to know if there's special rules. So that's why we're going through all of this. So what if you have a child away at college? Well, there's some really good news here. There's a special rule. Sometimes special rules are bad. You don't like them. Sometimes they're good. Well, these are really good rules. So you can count a child as living with you during the time when they're temporarily away from your home and not living with you. And a child away at college meets this requirement. So you have a child away at college and they're not living with you when they're away at college, and you say, you know, they're away enough that they're not actually living with me more than half the year, but you get to count that time that they're away at college as actually living with you, even though they really aren't living with you. That's one example of this sort of temporary absence rule. Other example includes time away due to illness, serving in the military, or being on vacation. So a very nice, helpful rule really helps you meet the more than half the year requirement. Here's another special rule that is really a great rule. What if you have a newborn baby during the year? There's a special rule that says if a child was born or died during the year, they're treated as having lived with you more than half the year if they live with you more than half the time they were alive during the year. So you don't look at the time, you don't look at your year, you basically look at their year. So an example would be if you have a baby in December, the baby is treated as having lived with you for more than half the year because the baby lived with you, in this case, the entire time they were alive during the year. So that's how that rule works. The final requirement to be a qualifying child is they must have a Social Security number. That seems pretty straightforward, and it is pretty straightforward. Just stop and think about individuals who meet all these requirements and how many of them do you have. So how many that are related to you in the right ways, they're under the required ages, they're younger than you, they have lived with you for more than half the year in the United States, and they have a Social Security number. Now, there are 3 special rules before we leave qualifying children. As you can see, you know, the qualifying children rules are kind of long and complicated. And so here are 3 special rules that I need to explain to you. I have a slide for each one of them. Here's the first one. An individual can be treated as the qualifying child of only one taxpayer. And you may be thinking, okay, well, when would that even come into play? So here's an example. Let's say that you, your mother, and your daughter live together all year, and your daughter's 3 years old. When you think about it, your daughter meets the requirements to be the qualifying child of both you and your mother. Let's just think about that. She's your child. She's your mother's grandchild, so the relative test is met. She's only 3, so she's clearly under 19. You all live together, so you've lived together more than half the year. So you step, and let's assume she has a Social Security number. So you step back and you say, well, she's the qualifying child of both of you. You can both take the earned income credit on the basis of having her as a qualifying child. No, you can't. The rule is that only one taxpayer can treat a qualifying child as a child. So you and your mother both can't count your daughter. There are rules that determine which one of you gets to count her. They're called the tiebreaker rules, and you'll find those rules in publication 596. This is one of those rules where I've decided not to go into the details in this video because while this situation certainly does come up, it doesn't probably apply to at least the vast majority of taxpayers. So I didn't want to take time going through it. I'm going to go ahead and tell you, though, that in this case, the tiebreaker rule would say that you, the mother, get to count the child as a qualifying child, not the grandmother. However, there are rules that say that under certain circumstances, you and your mother could actually agree as to which one can count the daughter as a qualifying child. You both can't, but you could actually agree as to which one is going to count the daughter. The next special rule I have for you is that an individual might not be allowed to take the earned income credit if he or she is the qualifying child of another taxpayer. And if you're married filing jointly, this rule applies if either spouse is the qualifying child of another taxpayer. Now, to help you understand this, let's talk about a situation where this rule could come into play. I'm going to kind of use the same example I used on the prior slide. Let's say you, your mother, and your daughter live together all year. Your daughter is 3, but now I'm going to add a fact. I'm going to say that you're 23 and a full-time student. Well, that means you're going to meet the requirements to be a qualifying child of your mother. You're her daughter. That meets the relative test. You're under 24 and a full-time student. And you're living together. So you've met the requirements. But the question is whether you're going to be allowed to take the earned income credit because now you're the qualifying child of another taxpayer. And the general rule is that you can't. That because you are your mother's qualifying child, you're not going to be allowed to take the earned income credit. But it does depend on your mother's tax situation. So under certain circumstances, you might be allowed to take the earned income credit. And you'll find those details, again, in IRS Publication 596 on the earned income credit. Now, the final special rule related to qualifying children is that an individual might not be allowed to count a relative as a qualifying child if the relative is married. Here's an example of where that would come into play. Let's say that your son and his spouse live with you all year, and your son is 23 and a full-time student. So your son appears to be a qualifying child. Your son meets the relative test. He's under 24 and a full-time student. He's only 23. And you live together. So far, so good. But the rule is that you might not be able to count your son, even though he's met those requirements, as a qualifying child if he's married. In my example, he is married. So whether you can count your son as a qualifying child depends on several factors. So again, I'm not going to go into those details here because I don't want to make this video go on for hours and hours. But I've made you aware of the rule, and if it applies to you, go take a look at IRS Publication 596, and you'll get the details there. If you do have any questions about qualifying children, or if you are confused, well, one thing, if you're confused, you might just want to rewind and go back and listen to everything I've said. I know it can be difficult for all of this to sink in. It's so much information, so it's hard for it to sink in. So sometimes going back a second time, even a third time, will really help you understand it. But also I want to make you aware that the IRS has this wonderful, wonderful online tool that's called the Earned Income Tax Credit Assistant. I've given you the web address here. I'll also hopefully have room to put this in the description for this video. That will actually take you through a step-by-step process and help you determine whether you have any qualifying children. So it's a really great tool to be aware of.